now we kind of turn to probably our more specialist areas, those niche areas in tax. And Lee, you're an expert in employment taxes, and there's been an awful lot of change in that front over the last 4, 5, 10 years. We've got this hot budget coming up. So what's your predictions when Rachel Reeves stands up from an employment tax point of view? Where do you think it's going?
Well, in the Labour manifesto before the election, she actually said there wouldn't be any changes for the next 5 years in respect of income tax, national insurance and VAT, which kind of backs her a little bit into a corner. But I think national insurance is potentially one that could change, that she might go back on. An option would be to increase the employer's national insurance rate. So it's currently 13.8%, they could add 1% on, which is 14.8%. But I still think that isn't a political win. It increases costs for employers, but I think there are going to be some employer costs where an employer has to burden some costs as part of this budget. There's a lot of talk at the moment around introducing a lower employer national insurance rate on pension contributions. So I think the estimation at the moment is there's around 23 billion lost in national insurance on employer pension contributions. Now, if they want to recoup some, they could easily bring in a 1% or 2% rate on employer national insurance contributions. Won't be popular with employers as a whole, potentially may stifle growth, especially when we combine that with some of the predictions from the Low Pay Commission around an increase in national minimum wage. So it's currently £11.44. There's an estimation that it will be at £12.10 from April. So if we combine that alongside the employer national insurance contributions, there could be an additional burden of costs for employers.
Yeah, so I mean, if you're any business employing people, there's the likelihood is the direction of travel is a change because it's a big revenue raiser, the employment taxes as well. So what is a small business you should be looking at the moment in the lead up to the budget and talking to your professional advisor about?
I think it's a bit of forecasting of what those impacts could have, looking at your workforce and your long-term recruitment needs, how that would look from a cost perspective if we factor in additional national insurance, minimum wage, etc., to see is it actually feasible to recruit in certain areas, or is it better to retrain and expand current employees' skill set, I'd say. Okay,
that's Scott, from a VAT point of view, I mean, we've got this theme of no new taxes when it comes to the kind of mainstream, and I think VAT has been touted as one as the headline rate potentially is not necessarily going to adjust, but the devil is very much in the detail with that,
Absolutely.
What do you think that Rachel's going to come out with?
As we've seen with the school fees, they've kind of introduced school fees because they felt it was the right thing to do, which has had a huge impact on schools and kind of private schools. It will probably have an impact on the education system and the wider kind of sorts of things. But I think we're already seeing HMRC concentrating on things like holding companies and management charges between group companies. They seem to be kind of focusing on that and whether they are appropriate charges, appropriate rates, appropriate in themselves. And there's also quite a movement, not just in the UK but overseas as well, on overseas companies and whether the overseas companies should have to register in, for example, the UK and account for VAT here. So I think there could well be a focus on those sorts of areas. It would be nice if the government was to kind of give a little bit of kind of money back and help back to people, for example, allowing people to recover more VAT where they're partially exempt, or even not-for-profit charities and care charities given concessions that are similar, are already there for public sector bodies. That might help, but I generally don't see that happening. I think the focus will be on compliance and probably penalties, increasing kind of penalties if compliance isn't met.
Yeah, I mean, it's obvious it's one of the biggest revenue raisers out of tax, and with the rate being frozen, we all know past governments, regardless of your political persuasion, there's ways and means of getting the number up without the headline rate going up. So you don't see any change in the registration thresholds, which have obviously lagged significantly behind inflation.
Agreed. I mean, everybody wants the registration thresholds to go up. They say that for smaller businesses, it would take a lot of burden, a lot of cost away from them. Governments have had chances to do that up until now. I don't think so. I think they'll want to capture as many people within the VAT net at this point in time as they possibly can.
So back to your point about the recovering more VAT and the partially exempt businesses, bring that real for me. What would that look like, in terms of specific expenditure that you can't reclaim on at the moment, or potentially you could in the future?
So at the moment, if a business has exempt activities, it's not allowed to recover all of the VAT it incurs as expenditure. It has to perform a calculation. And if the VAT that is restricted or blocked is below £7,500 per annum, it can recover that. If the government wanted to help businesses, it could increase that limit. It has never been increased, certainly in my kind of recent kind of memory and lifetime. So putting that up would allow smaller businesses who are affected to recover more VAT, and it might help them.
Yeah, no, obviously from a smaller business point of view, turning to Lee, salary sacrifice and electric vehicles, I mean, it's a hot topic. We've got car dealerships around us here, that have been selling electric cars for fun to businesses, not necessarily people themselves. What's your thoughts there? Because that's obviously been a big topic in your world.
Yeah, it's a key benefit that a lot of employers are trying to introduce. We will have some tax changes from 6th of April 2025, in that the current benefit in kind percentage for electric vehicles is 2%. From the 6th of April 2025, it'll go up to 3%, and it'll go up to 1% each additional year until it gets to 5% from 2027-28. Now, the initial thoughts are that this could be off-putting, especially for people, small businesses who run a fleet. However, if we still look at the overall tax impact, it is much lower than, say, for example, obtaining a diesel car, which isn't by a salary sacrifice. I think the danger of increasing the rates is that the market for electric vehicles, the market share at the minute is currently stagnating anyway. So I think it was 17% last year, which was a decrease from 18% the year before. So if the government is trying to get to their green agenda, the net zero agenda, they need to incentivise as much as possible. I feel if the market share is going down, it might be a case of car leasing providers having to factor in this additional tax into their rates. So hopefully we won't see too much of an impact. But overall, I think the tax savings and the national insurance savings still outweigh any additional tax impacts. I think going back to my earlier point regarding pension contributions and a potential employer national insurance on pension contributions, that could attack pension salary sacrifice, because at the moment people convert a portion of their salary into an employer pension contribution to save the national insurance. Now, if we're going to have national insurance on pension contributions, that saving will be reduced, so it may not become as attractive going forward if that is implemented.
So with auto-enrolment that was brought in, which effectively was a tax on business, a positive one, I have to say, and I think it has a significant impact on the businesses, but we're putting national insurance on those contributions. So are we talking about a tax on a tax here?
Potentially, yes. And I think it comes down to the size of the deficit. I think it won't have any political will from the electorate to do that. However, if they brought in a full 13.8% national insurance on pension contributions, I don't think that would go at all. But I expect if they do bring it in, to start with maybe a 1% or 2% rate and slowly increase that over time.
Yeah. Go back to, the headline grammar's obviously the cars, and it's very, very emotive and all that. Did I read something about a potential cost per use of the roads and things like that that might come in to replace some of the lost revenue and fuel duty or the company cars? Yeah,
there's rumours about usage per mile. Of course, at the moment, if somebody uses a company car for business mileage, they can be reimbursed a certain rate for company miles. If somebody uses their own car, they can be reimbursed an amount. These amounts obviously factor in VAT and fuel duty and things like that. As we come into more usage of electric vehicles, I think there needs to be some form of duty on that. What has been proposed in previous budgets is things like no benefit in kind tax on installation of electric chargers, etc., to try and increase uptake. But ultimately, as what the projection is that more people use electric vehicles, revenue for HMRC may go down, which means as predicted, they need to start increasing things like the benefit in kind tax.
Yeah.
So I think that will only go one way
Yeah.
unless it really stifles activity in that market.
So that's the kind of general negative theme we've experienced, is that it's
Yeah.
going to be a revenue raising budget. You know, now from your point of view, Scott, you know, you've mentioned we've got the micro businesses at the VAT threshold, your not-for-profits and the partial exempt businesses, potentially overseas and groups. Who else should be paying attention to what's going on in the VAT world at the moment? You know,
I think most businesses, the watchword is compliance and keeping evidence to make sure that you're supporting all your transactions. HMRC are kind of looking at importers. They're looking at importers of kind of goods, and they're also looking at providers of services overseas. So I think anyone and everyone, as we all know, VAT applies to kind of every business, small to large. I think no one's really going to be kind of, I suppose, no one's going to escape the HMRC's kind of eyes.
to me, in my time, the most complicated area, you know, we can all dabble in a little bit of other areas of our profession, but VAT is one that I've always ran to the hills on. So, you know,
I think, so going back to the importers, there's a focus at the moment on, do you own the goods that you import? And on the back of Brexit, there's been a lot of kind of practical...
So anti-avoidance type measures,
That-
you know.
that sort
so
of
that
idea,
My
exactly.
Belgian warehouse is no longer going to be of use.
Or even down to something as simple as, you're importing goods, do you genuinely own the goods when you import them? Or are there kind of shipping arrangements which may kind of contradict that? So I think every kind of area, every kind of facet of compliance, if you kind of make sure that you get the basics right, you'll be doing the best you possibly can. HMRC are going to be looking at arrangements which they believe are resulting in a loss of tax to the revenue.
Yeah. One final killer question for you. Why is there still VAT on a digestive chocolate biscuit and not a Jaffa cake?
How many days have you got? It's a luxury item apparently, so that's why. Now, I would say it's a staple diet as far as I'm concerned.
And Lee, it's slightly more controversial.
Yep.
You know, all these gifts, Angela Rayner raving away in Ibiza, 800 quid, benefit in kind, should that be payrolled or should that be on the P11D?
Well, good question. I think first, was it an employer-related benefit? We're unsure, and there's only Angela Rayner who could answer that, I think. As you may be aware, we're coming into, from 2026, mandatory payrolling of benefits, so the P11D question will probably go away in due course. Part of what we're recommending on that is that people voluntarily register from April 25, so you've got a year of a landing zone. Going back to potential things that could happen in the budget around benefit in kind, is that currently it's only subject to employer national insurance, which is class 1A national insurance. If Treasury, the government wanted immediate win, they could potentially bring it into class 1 as a whole, which would mean primary and secondary national insurance.
20 odd years I've been hearing this word IR35, and you know, it's always a concern of the small business. You know, those one-person limited companies, construction industries predicated on them as well. Where's IR35 going? Because there was a bit of a watering down from the attack on the BBC.
Yeah.
You know, one-person limited companies. Where's it going now?
I still think it's a real focus of HMRC. Some of the more PR things we've seen is around, obviously, Sky Sports presenters, these sorts of cases where HMRC appear to be getting a lot of wins. A lot of those cases are based on historical rules. In 2021, we had a change of rule which essentially placed a burden on medium or large enterprises, or those in a group with medium or large enterprises, to assess the individual where they were providing services via a personal service company. It was quite surprising that that was done by a Conservative government, because it appeared to be more of a Labour-style policy. With that in mind, although there's a lot of uproar in the contractor sector about their lack of flexibility in working, etc., because what's happening is now they're being put into pay-as-you-earn roles because the engaging party doesn't want to take the risk from an IR35 perspective. Even though there's a bit of uproar around it, I think there will not be a change, essentially, in the near future, because I can't see a Labour government trying to change it to make a disparity between the employed workforce and the self-employed workforce. With that in mind, we're seeing a lot of compliance checks from HMRC, where they're writing letters to businesses asking 12 plus questions, which a business has to answer. And it's all regarding their processes that they have in place in order to identify an off-payroll worker. How do they assess their employment status, and how do they periodically re-review that? So the recommendation to employers is, if you've not done it, you need to implement appropriate processes to, one, identify who is working off payroll. Two, once you've done that, assess their employment status, whichever way you do that. And three, once you've done that, don't just leave it and not re-review it, because we're seeing a lot of employers getting caught out by, they're doing the first two parts, but then a contractor works for them for 12 months, 2 years plus, and they don't re-review that process. And that's a key area of focus and challenge for HMRC.
Again, another, on the face of it, a simple area that becomes very, very complicated. And Scott, I suppose in a positive sense, the one-person limited companies, there's still a lot of advantages in VAT with the various flat rate schemes that are out there.
No, there are, but it's interesting in what you say and how they're trying to kind of, I suppose, make sure that compliance is kind of at the forefront. If you look at the construction industry, they introduced the domestic reverse charge because they felt that in the subcontractor chain, there was a lot of VAT being lost and missed to the system. So they've introduced a system, a procedure that focuses on the main contractor. They've done a very similar thing with fulfilment houses, where fulfilment houses are then required to record, account and tell HMRC if there's any smaller businesses operating within. And on the digital in the digital world, platform operators have also got the same sort of liability. So I suspect that in an attempt to collect as much tax as they can, you might see, I guess, the core of kind of supply chains being responsible and having to account for tax rather than each individual entity.
There we go. And there was me thinking there was a bit of good news there at the end of the day.
Apologies.
That's great. Lee, Scott, thanks so much. I think you're demonstrating the wide breadth of expertise that we've got here at Assets, you know, in terms of, I call them niche, but actually we've just said VAT and payroll taxes are the biggest earners. So a slight tweak to them, and the devil is in the detail. Headline rates may not change, but it's the devil in the detail and actually understanding where things are at. And so thank you all, you guys, for joining us today.